Joining us now to talk about what it could all mean for investors is Yisheng Hung, the CEO of New York Life Investment. Welcome back, Yisheng. It's great to see you.
Thank you. It's great to be here.
So I'm not sure that the leaders have reached a final agreement in these ending moments of COP26, but ultimately, what have the few weeks and all the pledges meant for investors?
Well, you know, from an investor perspective, there were really two key developments that I'm very excited about. The first is that the investment community, the finance sector, was a part of the summit, part of the conversation, because ultimately, in order to fund this energy transition, investments are going to be required. And the second great development was that there was an international standards developed, a group that is going to be focused on ensuring that companies around the world will deliver consistent disclosure, their carbon footprint, the sources of their energy, how they're managing to get to an energy transition. And that's going to allow asset managers like New York Life Investments to be able to create high quality portfolios, compare one company against another, and really focus in on those companies that are advancing those causes that investors really care about, like climate action and seeing us get to net zero.
That's what I was going to ask you, Yisheng, which is the ETFs. How do you select who makes the cut, who goes into it? Because there has been a lot of criticism that of greenwashing, of false promises. It's hard to compare certain targets against other targets. So how do you whittle it down to high quality ETFs for investors in these categories?
Absolutely. You know, as I said, data is key to this. We need companies to disclose the information that we need to be able to select them. When I think about our own series of IQ dual impact ETFs that we're really excited about, what we've done in this case is partnered with leading nonprofit organizations like the National Wildlife Federation, Oceana, to deliver climate action ETFs. And one that I'm really excited about is our IQ and gender equality one, which we developed in alignment with Girls Who Code. And of course, they're focused on gender diversity and technology. Our product is broader than that. It's oriented around U.S. companies that are really focused on achieving gender balance at every level within the organization. So take a GM, right? 50% of their board of directors is comprised of women. We want companies that are focused on good policies like friendly leave. And here you have Spotify, one of the leading companies in that area, offering 26 weeks of leave for companies. So these are the kinds of companies that we want in our portfolios that we know are focused on these matters that really matter to investors at the end of the day.
Do all companies need to be net zero or very green or environmentally friendly, or is it all right for people still to hold an Exxon or a Shell or an airline or whatever it might be if they're happy for their portfolio not to be fully invested in ESG type funds?
Well, as an asset manager, we are a fiduciary, right? And we need to accommodate whatever the objectives that investors have. For those that don't want to think about, those that are focused around clean energy, they can go ahead and invest. And what we have is a whole spectrum. If you're thinking about the sustainability space all the way to exclusion, there may be those investors who just do not want certain companies in their portfolios, to those that are focused on those companies that are starting in one place and really focusing on getting better, all the way to impact, which is where our IQ ETFs fall into place, which is really making affirmative pushes in a certain direction.
When we last spoke, Yisheng, it was at Delivering Alpha back in September, our conference, and I remember one of your big themes that you liked was infrastructure plays. Well, now we did get the infrastructure bill passed, and I'm wondering if we've already seen the move in a lot of those alternative energy stocks that are going to be the key beneficiaries, or if you see this trend continuing, and if so, how to play it.
I see just the beginning of a tremendous, durable theme, both on the fixed income side of infrastructure in terms of municipals, because when we think about infrastructure, that's exactly what comes to mind, as well as public listed infrastructure, which, by the way, is trading at a 25% discount to the private markets. If you first start off on the municipal side, with this bill that is just about to pass, $550 billion is going to states and municipalities. They will be able to multiply that capital by matching it themselves and introducing leverage through issuances in the municipal bond market, whether it's tax exempt or taxable. We're going to see an enormous supply, which will be a welcome event for investors that are looking for incremental yield and increased diversification in their fixed income portfolios. Whereas on the listed infrastructure side, these themes are going to play out for a long time. Improvement in essential infrastructure, renewable energy investments, improving the digital infrastructure with power grids and cell towers. So we think that what this will do will allow investors to have a long duration asset, good income, and even in correlation to inflation, as well as participate in this energy transition we first started talking about.